So in the next couple of videos we're going to be discussing a trading pattern called the flag, which is probably one of the most well-used patterns out there simply due to its simplicity in the way that it looks and the way that it's traded. So I think it's best if we split this in a couple of videos. The first one will just go through its identity and a couple of its characteristics, and the second video we're going to go through how to trade it on live charts. So if we can first of all start with a left-hand drawing here. I've got a very simple, basic couple of drawings here that we need to go through before we go into the second video. But I've got two flags, one in a bullish market, which is the one on the left, where the market is going upwards, and one in a bearish market, where the market is going downwards. Now, first of all, the reason why it's called a flag is because it resembles a flag. So what we've got here is a flagpole, if we refer to the drawing on the left. So the trend is started to trend upwards, and then we've got an area and consolidation here that I've defined by two red line here that almost looks like a channel, and that's the actual flag itself. So in terms of its characteristics, in a bullish flag we have a market trending upwards and then an area of consolidation where the market simply stalls. Now the reason why it does this is because it's very rare for a market to just trend upwards and keep going up and up and up and then find reverse and go back down. It doesn't do that. If it's going to continue in an upwards direction, there needs to be an area of consolidation where it simply runs out of steam and needs to have a little rest before it breaks out of that consolidation area, which is which you can see in just past or just above the upper red line, and then it continues in the upper direction. Okay, so all this area does here, the area of consolidation, is simply allows the trend or the pattern time to gather some more fuel, re-energize itself, and then continue in the original trend direction, which in this case is upwards. Then we've got, if we refer to the drawing on the right, we've got a bearish flag, which is a flag that occurs in a selling market. So we've got a flagpole that starts from the top here, and then area consolidation in this area here that's defined by these two red lines. And then finally, after it re-energizes itself, it breaks through the lower red line, or the lower red channel line, if you like, to continue in the downward direction, which is the original direction where the trend first started. Now, don't be fooled. Flags have got all kind of different shapes and sizes. It doesn't just have to be this channel, which are pretty much kind of parallel red lines. It can look like a triangle. It can look like a mishmash of different shapes. It doesn't really matter. The point is that the flag is a flag when it starts to begin a trend, and then it's an area of consolidation occurs where it simply stalls, and then once it continues in that trend, continues in the original trend, that itself defines that you are looking at a flag in your market. So that is as simple or as hard as I want this to go for now. What we're going to do now is, if you just click onto the second video of this series, we're going to go through exactly how to trade it on your charts.